In our previous SPCE video, we talked about their commercial space flight, and ever since then, a lot has happened, from the stock's price going up like crazy and both bullish and bearish sentiments running wild on social platforms like Twitter. So keep watching as we tell you all you need to know today about Virgin Galactic. But before we do that, subscribe to our channel $1 World for regular penny stock updates. Despite reaching a critical milestone in space travel, Virgin Galactic Holdings Incorporated is struggling. Last Thursday, the business celebrated a watershed moment as it launched its first commercial spaceflight, collecting revenue and sending the Galactic 1 mission into the sky. This historic voyage sent 3 Italian Air Force pilots to the edge of space, assuring their safe return to Earth. In an exciting turn of events, the business has just unveiled its plans to launch Galactic 2, an upcoming expedition geared towards generating more revenue. This ambitious initiative is scheduled to take place in August and serves as a testament to the company's unwavering commitment to pursuing subsequent ventures. Moreover, Virgin Galactic has officially announced its intention to offer monthly space tourism flights following the successful completion of Galactic 2. Despite the encouraging progress, the stock's performance has been underwhelming. It appears to be a classic case of the financial strategy commonly known as buy the rumor, sell the news. Earlier this month, speculators enthusiastically bought up shares based on rumors and speculative assumptions. Now that the positive news has materialized, these investors are looking to cash in on any remaining profits. Virgin Galactic, without a doubt, seems to be undervalued and not receiving the credit it deserves. The main focus of this discussion is to shed light on the company's future trajectory, especially its financial prospects. In recent years, growth-oriented organizations have commonly followed a pattern of substantial capital investments followed by significant cash inflows. However, the primary concern remains when Virgin Galactic will start generating profits and meet the expectations of its investors. While the company has achieved remarkable progress in the field of space tourism, capturing public imagination and pushing boundaries, the real challenge lies in translating these achievements into sustainable financial success. With heavy investments in technology, infrastructure, and talent, Virgin Galactic aims to create a profitable and thriving business. Investors are now looking for clear signs of profitability. Transitioning from development and testing to operational success with consistent and substantial revenue streams is the key for Virgin Galactic. Successful completion of Galactic 2 and subsequent monthly space tourism flights will be crucial milestones. Investing in any business involves inherent risks, and accurately predicting the future of the global economy is impossible. Even the most precise estimates can be thrown off by unexpected events, such as global pandemics. These risks are particularly pronounced in industries like space tourism, where only a few organizations operate, and even fewer possess the financial resources to overcome the substantial challenges. Unfortunately, Virgin Galactic currently finds itself in a vulnerable position. The company reported a net loss of nearly $159 million in the first quarter of 2023, a significant increase from the net loss of $93.1 million recorded in the third quarter of 2022. These financial figures underscore the challenges faced by Virgin Galactic as it strives to establish itself in the space tourism sector. Developing and commercializing space travel involves significant costs, technological complexities, and regulatory hurdles. The company's losses indicate the ongoing investment required to reach operational maturity and generate consistent profits. The company's financial status is concerning, since losses have exceeded $566 million in the last year alone, and this poor trend has continued quarter after quarter. The scale of these losses highlights the company's persistent struggles and calls into doubt its capacity to attain long-term profitability. To put this in context, Virgin Galactic's current loss rate indicates that it has only a year and a half until its financial resources are completely drained. This situation is caused by the company's minimal remaining cash equivalents, and marketable securities, which amount to around $874 million. The company's issues in resolving its financial predicament and continuing operations are exacerbated by the comparatively small number of accessible financial resources. Virgin Galactic's future flights are facing potential delays, further complicating the company's situation. Adding to the challenges, its main competitor Blue Origin has just unveiled plans to commence its own flights, potentially overshadowing Virgin Galactic's accomplishments. Recent launch failures, such as the 26% share price loss experienced by Astrospace Incorporated, heighten the stakes for investors in the space stock market. The inherent risks associated with providing commercial space flights in an untested industry fuel investor skepticism regarding the feasibility of conducting large-scale flights and turning a profit. To make matters worse, Virgin Galactic's negative cash flow is expected to persist for an extended period. Any further setbacks in scaling up commercial space flights from Spaceport America could impact the company's revenue prospects. Nonetheless, the start of commercial spaceline operations is a significant milestone for Virgin Galactic after multiple failures and delays. Investors have been waiting for revenue-generating operations with bated breath. Although negative cash flow is expected in the next years, the firm anticipates a significant growth in sales over the next 4 years, perhaps leading to a favorable revaluation of its shares. According to Allied Sector Research, Virgin Galactic aims to capitalize on the rapidly growing space tourism sector, which is projected to reach $12.6 billion by 2031. The company's Delta-class ship, which was constructed at a cost of $50 million to $60 million, has the potential to generate $2.7 million in revenue per flight when operating at full capacity. Thus far, Virgin Galactic has secured 800 reservations and received consumer deposits totaling $345 million. To reach the break-even point, the company estimates that it will need to conduct 225 to 250 flights annually. This figure serves as a crucial benchmark for determining the operational scale required for the company to generate sufficient revenue to cover its costs and achieve financial stability. While Virgin Galactic has lost money since its IPO in 2019, revenue-generating initiatives are expected to help offset future losses. Despite the favorable outlook, it is vital to highlight that the company's present value is high. However, the prospect of substantial revenue growth following the start of commercial operations may eventually justify the price. Following its inaugural commercial trip, Virgin Galactic faces both opportunities and challenges. While potential delays and competition pose concerns, the company's entry into the space tourism industry marks a significant milestone and holds promise for investors. Undoubtedly, there may be obstacles along the way, with negative cash flow expected in the near future. However, the potential for future revenue growth and profitability provides a glimmer of hope. Virgin Galactic's ability to navigate the uncharted territory of commercial space flights will likely influence the trajectory of the evolving space tourism sector as a whole. The company's progress and performance will be closely watched by investors and industry observers alike. Their success in attracting customers, delivering exceptional experiences, and ultimately achieving financial stability will shape perceptions of the viability and potential of space tourism as a profitable venture. While challenges are expected, the potential rewards are significant, as Virgin Galactic continues to refine its operations, gain experience, and address any setbacks. It has the opportunity to establish itself as a leader in the space tourism market and pave the way for future growth in the industry. Investors considering involvement in this sector should carefully weigh the risks and rewards, keeping a close eye on Virgin Galactic's progress and its ability to overcome challenges while capitalizing on the tremendous potential of space tourism. The online community, including Twitter users and various stakeholders, appears to be divided into two distinct groups when it comes to their sentiments towards the stock of Virgin Galactic. One group expresses bullishness and optimism, anticipating positive outcomes and potential growth for the company. The other group, however, takes a more bearish stance, expressing skepticism and caution about the stock's future prospects. Ultimately, only time will reveal the true outcome for SPCE and its investors. As the company progresses, achieves milestones, and demonstrates its ability to generate revenue and profitability, its trajectory will become clearer. To end it off, we think SPCE is definitely a good stock to add to your watch list. Virgin Galactic as an aerospace company is definitely headed in the right direction under the right leadership, but whether it's the right pick for your portfolio or not is a question you'll have to answer yourself. Remember that this is not financial advice and you should always do your own research and make informed investment decisions. That was all for today. Let us know if you think this stock will make you rich or not in the comment section. Hit like and subscribe to our channel $1 World for more such penny stock videos, and we will see you in the next one.